Hi, welcome back. You're watching MF Corner. With me today, I have Luis Baruga, CEO of GlobalX, and Swaroop Mohanty, CEO of Mirae Asset Investment Managers India. We've been speaking about, thematic investing through the ETF route. So we've spoken a bit, a fair bit about the global trends, how they're shaping up and all. But Swaroop, in India, one of the concerns remains that, we can't yet invest overseas through mutual funds. I understand that there is the ETF route which is still open, but what is the kind of headroom there? I mean, for somebody who's watching and interested in these trends that we're talking about, is there even scope to invest currently?
Yeah, I mean, there are three aspects to this whole thing. The first one is the 7 billion, which was put in place for funds investing in through ETFs and other routes and actively otherwise. That has been exhausted. But there is the other route, which is the fund-of-fund investing abroad or in any other ETFs that is there. That is open for 1 billion, which is still completely unutilized. I would believe there is around 750 million still left there. So there is space there. Apart from that, investors today in India are free to take this same investing route through the LRS route, which is fairly substantial. So if one wants to invest, there is still space. Whichever way one wants to invest is available to them. They have to find their own route. But the one which is open now is the fund-of-fund route, which we've taken for the EV and AI for GlobalX products. And of course, the LRS is always open. And I do believe that there is a lot that is going to happen through the LRS route.
Okay. Luis, as an outsider to the Indian market currently, what has been your assessment of where things stand, and what do you think is going to be the inflection point for adoption of ETFs by the retail investors particularly?
Great question. I think the inflection point is going to be driven pretty much by the same factors that we have seen in the US and in other markets. So regulatory support, a transition to a fee-based model in wealth management, and a shift from active towards passive strategies. And we can already see early successes in the Indian market for ETFs coming from government mandates and pension plans. And also, to Swaroop's earlier point, I wouldn't underestimate the power of the retail audience in the Indian market, because increasingly we are seeing more and more fintech platforms and robo-advisors that really serve a very good purpose from an investment standpoint, because they educate investors and they allow them in just a few clicks to have access to individual stocks and ETFs. And what we are seeing, or what we have seen at least in the US, but we expect a similar trend to happen in India as well, is that retail investors, they like ETFs because of the benefits of diversification, transparency, they can buy on an exchange, and also they like thematic investing because for a retail client, sometimes understanding like the new multi-factor ETF based on size, value, and momentum may be too difficult, but they understand cloud computing, they understand cybersecurity, they understand fintech, because these are tools that they are using every day. So if you combine the fintech platforms with a greater financial education, because more and more investors in India have access through their cell phones to more market data than we were able to see like 10, 15, 20 years ago, right? So I do think those trends are really powerful tailwinds for the ETF industry in the Indian market.
Okay, that's good to hear. But, India is still a market where active funds rule, right? And we've had this debate so often on active and passives. But there is scope still, right, for a developing economy for active funds to outperform. In that environment, while passive funds are growing, there's no doubt, but can they become a big challenge to active funds, or is it going to be more like coexistence with passives being more like the country cousin?
Yeah, Sumaira, every time we discuss passive, this question automatically comes out. But look at it from the investor perspective. I do believe at this moment the Indian investor is spoiled for choice. There is enough acumen in the Indian active industry to outperform the benchmark. It's still there, and then the recent volatility in the market is actually giving them far more scope. But what's happened in India, let's understand. There is the categorization of funds, and that's put an end to probably the ideation of new ideas.
Yeah.
And look at ETFs. I mean, earlier when I started discussing ETFs, a lot of my knowledge on ETFs come from practicing it for 2-3 years now and listening to Luis and how their story has unfolded. Now I begin to understand, and this is something which Luis will agree with me, that ETF is a solution. And the beauty of the passive side is wherever there is an investing universe, you can create an index on it, you can create a fund, and through factors create multiple options of that fund.
If you can think it, then there's probably an ETF
there is an
for
ETF.
it.
Yes, and that's why there are so many possibilities, and that's why there are so many launches. Now again, I bring back my simple thinking: what is right for the investor is right for all of us. Now, the sole objective of the investor should be to construct a portfolio as per his or her goals and desires, as per the risk profile. And we believe at this moment there is scope for a mix of both. There are some very strong active managers there who you can have, whether you have it on the core side or the satellite side. It's up to the investor's portfolio. But there will be some fantastic ideas from the ETF side which you just cannot ignore. Look at EV. When you look at it, you probably look at the theme, but in your mind this is a 20-30 year unfolding theme going forward. You just have to pick it up early. And in India, people are selling, a manufacturer sells 10,000 cars because he or she is producing 10,000 cars, right? That's the situation, and as this progresses from the cars to the entire ecosystem, we've seen that happening in consumption, healthcare, financials, and this is how it is. So it is a compelling story. Some of them will be to incorporate that in your portfolio. So our view is that they will coexist. But at the end of the day, the investor's sole desire should be to construct a strong portfolio. And if you see the overall environment, a combination of both at this moment in India can give a portfolio far bigger strength. And that's what people should do, not get caught in the noise of whether it's active or not. So think of it from a very, very objective portfolio construction perspective.
Okay, so we've at least reached a point where ETFs, passive funds have nudged their way into the portfolio. Which part of the portfolio and the allocation remains to be seen, but it is now a part of the Indian portfolio.
The growth numbers are already showing, that you cannot say that they are not there in the industry. You yourself at the beginning of the show just talked about the growth.
Yeah, absolutely. So Luis, one final thing. You have spoken about blockchain, cybersecurity, EVs. Leave us with one more innovation that's in the works.
Great. Okay, so I think we have a high degree of conviction on the metaverse. It reminds me a little bit of when we launched our social media ETF back in 2011, which was the first social media ETF in the world. It's still very early stages, but we do see some similarities. And we did launch the social media ETF even before Facebook went public. And the reason why we are so optimistic about the metaverse is because it sits at the intersection of three very powerful themes: social media, video games and esports, and augmented and virtual reality. So I think that convergence of themes into the metaverse is a very powerful value proposition, and the numbers are there. If you look at year-to-date investments into the metaverse, has been over $120 billion. But even one more relevant data point is that 79% of active users in the metaverse have made a purchase. That's a really remarkable conversion rate that we haven't seen in many industries before. So we're still cautiously optimistic because it's still early stages, but we do have a very optimistic view long-term for the metaverse.
Okay, and I think there's an equally optimistic long-term view for passive funds, especially ETFs in India as well. So thank you very, very much, Swaroop and Luis, for joining in. And, there you have it. It's mostly like a snowball effect, right? The snowball has started rolling down the hill and it's gathering momentum as it goes down. And probably there will come a time in India as well where you can't do without an ETF. And, that's the hope that retail investors will understand and encourage. Thank you very much for watching. I hope you enjoyed, and I hope this was a learning experience.